Now then, let's take it back to Kenya. It may be ground zero for innovative payment solutions in mobile money, but if you wanted to trade in Treasury bills around here, there was quite a bit of paperwork involved. Literally. That is, however, until now. Kenya Central Bank has enabled over-the-counter trading for Treasury bills after automating the entire process. Individual investors trading in 91, 182 and 364-day T-bills can now trade in them between 1 day after the value date and 5 days to maturity. In a statement, the central bank said the move aimed to raise trading volumes by eliminating the frustrations that kept investors away from short-term government paper. Previously, only commercial banks would electronically trade government paper, and this would be only in the 364-day T-bills. Let's find out how this paradox emerged. Nderi is a manager in charge of corporate advisory services at ABC Bank, is live with us in studio tonight. Johnson, this is 2014, Kenya's home to M-Pesa. How is it we're still trading T-bills with paper, quite literally?
I'm not even sure we used to trade it. What you do is you'd buy and hold to maturity, and if you wanted to liquidate your position, maybe you may have to have discounted to the central bank. I'm not very sure about how that went, but now we could actually trade it the same way we trade treasury bonds, and that's, I think, the new innovation that the government is bringing on board.
Indeed. What effect do you think this will have on the volumes of T-bill trades now?
Well, obviously, the one question where investors always ask before they take a position is, how do I exit if I don't want to hold to maturity? And if the answer is now that you can exit through an OTC facility created where you can actually sell your T-bill to somebody else, then that becomes now a better proposition for them, and you hope you will see increased liquidity in that paper.
Indeed, we had seen complaints from commercial banks, and one of the reasons they avoided using horizontal repo facilities was the sheer amount of red tape involved in using T-bills as collateral. Do you think this has solved that particular problem?
It goes some way into solving that. From what I saw in the trading procedure, it will be largely like what we do with treasury bills. I mean treasury bonds. And for T-bonds, we've seen buy-sell back transactions, which really are, in a sense, which really are actually repos. And therefore, if they did that for T-bonds, and then therefore this would probably they'll be able to do this for T-bill with the paperwork that has been cut down.
Indeed. Final question to you, Mr. Nderi. The Kenyan government plans to enable retail investors to buy into Treasury bills and bonds using their phones. The product for that is called Treasury Mobile Direct. It's been working for about 2 years now, yet to come to market. That should happen by the end of the year. What's your evaluation of that plan?
Well, the more the merrier, I guess. If we're able to, give these people savings products like this, in addition to shares, bonds, and corporate bonds, then it becomes a valuable saving resource, and perhaps even in the future we could see commercial paper being taken up the same, which is really a T-bill but issued by companies.
Indeed. We'll have to leave it there for the time being, though. Thank you very much for that. That's CCTV. That's Nderi, rather. He's a CCTV regular here, but he's also the manager in charge of corporate advisory services at ABC Bank. You can continue the conversation with him online at Nderi_J. That's his handle on Twitter.